Does trading cryptocurrency make you nervous? Do the Bitcoin ups and downs keep you up at night? Are you experiencing headaches and stomach pains? Maybe you should see a doctor. But if you want to hear the calm voice of reason, you've come to the right place. In this episode, we welcome YouTube video maker Carter Thomas to the show. A fan of technical analysis, Carter shares his methodology and mindset for tracking and trading the cryptos, all while staying super chill. So relax, take a deep breath, have a slice of bacon. We're frying up episode number 91 of the Bad Crypto Podcast.
5, 4, 3, 2, 1, 0, ignition.
Who's bad?
The pause that refreshes, Mr. Travis Wright. Are you in a Zen place?
You know, I don't know that I've ever been this relaxed before, Mr. Joel Calm.
Buy Bitcoin, sell Bitcoin, deep thoughts
Hodl.
with Jack Handycoin, Hodlcoin. Yeah. Welcome to the Bad Crypto Zen podcast, where we are super chill, and you'll understand why when you hear the reassuring voice of one Carter Thomas today. We had a really great discussion with him.
It was an amazing discussion with Carter Thomas. I was blown away.
It's great content, but he does have this reassuring voice to him. His dulcet tones may be dulceter than mine.
He is super chill, and, you know, he is super knowledgeable. He has ramped up pretty sufficiently over these past couple years. He's built up a YouTube audience of over 100,000 subscribers. They are big fans of his technical analysis and talking about the cryptos and how to trade the cryptos. And so we have a pretty solid interview with this guy for sure. I think it was definitely one of the better interviews we've done.
Well, it's one of the better technical analysis videos,
Sure.
especially audios, since it's the only time we've talked about technical analysis, and I know people have been waiting on this. But before we get to it, quick shout out to our show sponsor. The crypto space is packed with companies, and some of them we bring to you here. And if you have tried to get support on any of these exchanges or other sites, you know that you might have a hard time getting through to a real person, and our show sponsor, Staff Virtual, knows how to solve that, how to help these companies keep up with customer support. So if you are in the crypto space and want to do some outsourcing, check out staffvirtual.com and see if they can't help you solve that.
Bad Crypto voicemail. You have one new message.
This is Greg Schwartz from San Francisco, California. You're listening to the Bad Crypto Podcast. Stay bad.
Thank you, Greg. You stay bad also, brother.
You're so bad, Greg. You're the baddest.
The most baddest, if you ask me.
Baddest.
The most baddestest? That sounds ridiculous. I tell you what, we have something that's not ridiculous coming up right here, right?
Yeah, it's our interview with Carter Thomas. So let's not dilly-dally, Mr. Travis Wright. No dillying. No dallying.
None of that. Of course not. We don't do any of that.
No meandering.
No dogs allowed.
No dawdling.
Well, then go then.
There's lots of great content out there on cryptos, but there's also a lot of crapto, Travis, right?
There's a lot of crapto content, a lot of cryptocurrencies for sure.
Yeah. And, most of the podcasts that are out there are really good, but if you want to find a cesspool, then you can go to YouTube and find all kinds of people making recommendations. They don't know what they're talking about. They're still, even though it's over, they're still shilling BitConnect, but there's some gems in there as well. And we're fortunate to have one of the hosts of a YouTube channel that has one of those gems of a channel with us today. Actually, people on our Facebook, the mastermind group on Facebook, started talking about him, and that's how we learned about Mr. Carter Thomas. He is the founder of Coin Mastery. His channel on YouTube, which is youtube.com/Coin Mastery, has over 107,000 subscribers. It's one of the biggest crypto related channels. He's got daily content around crypto trading, investing, psychology, and he's known for having a calming approach to crypto. You know, he lulls you into a sense of Dogecoin that gets you all zen. and I think you're going to like this. So welcome to Bad Crypto, Carter. How you doing?
I'm doing great. Thanks for having me, guys.
Do you hear that calm voice?
I don't know. His dulcet tones might be better than yours, Mr. Joelcom.
It's
They are
funny.
quite dulcet.
People have said that. They're like, "Oh man, I love listening to your channel, especially when I'm putting my kids to sleep. It's just perfect." And I'm like, "Is that a compliment, or is this? I don't know if that's a good thing or not."
You make me sleep with your content, Carter. It's really
I know.
good.
Crypto meditation with Carter Thomas.
I know. I keep joking with my friends about putting out like a meditation series for traders, but who knows?
Breathe in and hum.
Yeah, exactly.
Well, we're glad you're here. Tell us how you went down this crypto rabbit hole. When did that happen, and how did it happen?
Sure. I bought my first crypto right around when Coinbase kicked off, and before that, I'd seen it. The whole Mt. Gox thing. I've been following it to a certain extent, but I'd never really got into it. And so Coinbase really kicked it off. So early 2013 was when I first started getting in, and for a long time, it was just a hobby where, I'd buy some and I would just keep up with what was going on. But I never really considered myself a trader or even a crypto investor. And in 2016, I started hearing about this new thing, Ethereum. And I started getting really interested in it. And I was working on a few other companies. As an entrepreneur, I have a couple other businesses. And I was just kind of looking for something new. And, in the fall of 2016, I just decided that, hey, Ethereum looks really interesting. I'm just going to start buying this up. I'm really just going to dive headfirst into it. Fast forward to 2017, I was, more invested at this point, and the prices started increasing. And at that point, I wanted to learn more about it, but there's only so much I can read about the technical. The community around crypto is still relatively small, and I'm really fascinated with macro and how, like, the social movement of cryptocurrency and what Bitcoin and Ethereum could represent, what it could do as a social tool. But no one was talking about that, and so I just decided that, hey, if no one's talking about it, maybe I should just document my journey trying to figure this out, trying to just make sense of what's going on, and that's how it all started, or at least the content side of it. And through that process, I learned about trading, and I've met a lot of really incredible people and learned so much. And it's also just been a terrific experience on all fronts.
That brings a really interesting point, because I think that's kind of how, Joel and I, when we started doing our show, we're like, you know what, let's sort of map out our journey into this whole crypto thing, because we're having lots of conversations about it. It's really fun and interesting. Once you get bit by the crypto bug, right, you're going like, wow. And then you start thinking about it. It seems like all the time,
It bit
right?
us in the arse, Mr. Travis, right?
It did. And there's no bug spray for this kind of bug. So I'm curious, so let's talk a little bit about some of the social good stuff that you think crypto and, Bitcoin and Ethereum can do, because I think that a lot of folks in the crypto space seem to really be about wanting to make the world a little bit of a better place, right? We realized that with that whole 2008, 2009 crash, that there's a whole lot of greedy people who are in charge of our financial system. Let's make the world a better place. And let's maybe get your opinion on how do you think crypto can impact the world?
Sure. I think that it's a huge demographic tool. And I don't think it's any coincidence that it started right around when the financial crisis happened. And I think that I think the transparency is just a trend that technology has really uncovered, no pun intended, over the last 20 or 30 years. And I don't see that changing. And I think that when you look at our economy, and specifically when you look at things like inequality, which I would consider inequality to be one of the biggest economic and financial threats to the global economy, just the way that money is dispersed among people, a lot of that can be linked to transparency and the markets and the amount of money that is locked up because of a lack of transparency. That's always just, on a personal level, it's always bothered me. But as a pseudo economist, it just isn't very efficient. It just seems like a system that's not really working to help as many people as it possibly can. And so the more that we can we can work towards something like that, I believe that it'll really help facilitate a more even playing field for new, potentially new political systems to emerge, new ideologies to emerge, but just new ways of thinking, new ways of transacting. And that just gets me really excited. I think it's just a long time coming and something that the world's ready for.
Can I get an amen, Mr.
Amen.
Can I get an hallelujah?
Hallelujah.
Hallelujah.
Of course, one of the, the problems there is the powers that be, and they are powerful. The governments of the world and the financial institutions, are very resistant in many respects to this kind of change. And, are you fearful, Carter, that even in the free world, that they're going to squash crypto before it really has a chance to blossom as, the dream intends for it to? Or do you think it's going to persist in spite of it?
I think that we live in a world that is driven by power, money. I mean, you go down the list of whatever it's called.
It sounds like a movie trailer. In a world that's driven by power and money.
That's right, featuring Steven Seagal. I think it's like one of those things where it's not even cavalier. It's just kind of irresponsible to think that it's just going to bypass everybody who's in the establishment already. And I think that's why one of the best things that crypto can do in the short term is to provide profitable solutions for some of the businesses and the people in power to make their companies even more efficient. Now that may result in, restructuring or whatever else it may be, but it gets blockchain, it gets distributed ledgers into the system. And I think that's the first big piece. And once it starts to get in, that's when you start to see that the transparency come through. Because I don't think necessarily that it's like certain people are going to, lose all their money, lose all their jobs, and then the money's going to shift over to people who bought Bitcoin in 2011. I don't see that happening by any means, but I do see that, the cracks start to be exposed. The ability to move money and not be able to prove where it came from, that sort of thing is going to start to go away, which is kind of counterintuitive to the narrative around crypto. So I actually think that it's going to be more of like a morphing of the current system as opposed to a destruction of the current system. That's really what it comes down to, is how do we work with the existing system, show them a better solution, and then let the technology do the work, as opposed to trying to fight people. I think that it's more of a replacement, an improvement upon what already is.
Mm-hmm. And if we can start collaborating and working together, a little cooperation, you know what? Maybe we can make the world a better place together. So that's great. I want to ask you this. So you mentioned that, you really started getting involved when Ethereum started rolling out. So you've been in the game now, going on 3 years plus probably. This past dip that we had going after, like the January, right near the end of December and January, beginning of January, just took off. And here we are. Everybody was like, woohoo. And then all of a sudden, Bitcoin goes from 20 grand down to 6 grand. And, for somebody who's calm, cool, and collected like you, how do you view these dips when they come like this?
Yeah, I think that the first thing that I think is really important for most people, or for everyone, myself included, to constantly remember is that nobody has any idea what a real price of any crypto is. All these valuations can be defined in any which way. In other words,
the same price, Carter. Moon.
It's just Lambo. That's at the end of the tunnel. And I think that I kind of have the assumption that pretty much everything is inherently overpriced. I don't know if that's true or not, but that's the assumption I go in with. And so when you remove that idea that Bitcoin, for example, is worth $19,000, and instead you look at it and say, look, this is all overpriced. What can I look at? What do I know is true? Well, fundamentals of manias, fundamentals of chart structures, those are all true, and those are all very pertinent to what we're looking at. And so when you look at something going parabolic, even if it's going to change the world, even if it is the most disruptive technology in history, it can't defy the laws of dopamine which is, the kind of manifestation of what these charts really represent. And so when I saw it come down, or as I see it do its thing, it's just a natural progression. It just kind of needs to happen for the market to expand. Like, that's just what markets do. And so I think taking the dream out of crypto, which is a very unsexy idea, but I think it's the only way to really look at it and just say, this is just what's happening. It was an incredibly fast run up. This had to happen in order for it to be a healthy chart, for it to be a healthy market, so to speak, and for the money to redistribute properly as markets do.
Don't take my dreams, Carter Thomas. Don't be stealing my dreams.
I'm trying.
Gosh, freaking dream stealing.
I know. I got a big garbage bag full of everyone's dreams over here. It's great.
Dream thief.
Yeah, that's right. I also think that there's, more on a conspiracy theory level. I think that there's just a lot going on of people manipulating the market, and I think it goes beyond people that are just trying to profit. I think that there's people that are truly trying to move it up and down, have the money and the resources to move it up and down, because they see crypto, specifically Bitcoin, as a brand. They see it all as a threat to an established system. And I think that as that price went out of control and as it was fueled up, it really set the conversation so that they could call it a bubble. It could be considered like, this is so ridiculous, and they could put some short pressure on the market in order to get their hands around it, to get control over what was going on. Because if it kept going beyond the chart side of it, it would just get out of control. It would just become a full blown mania, and who knows when it could stop, because there's no valuation you could put on it.
Now, you think that had something to do with the futures? Because it was interesting, because it seemed to be going parabolic, and then all of a sudden, once futures came in, and now Wall Street big money seems to be implementing and integrating into the system, that the price, the market got really wonky right after they started opening up the future. So you think that was just sort of a coincidence, or you think that's just that's just the nature of the game that we're in now?
I don't think it was a coincidence at all. I actually think that the futures markets played a part in it, but I think it's also a really good story that can put the front on front of something much bigger. And I don't know exactly what that is, but I do know that from talking to plenty of people in the financial world, whether it be hedge funds or private equity or anything, one of the biggest reasons why banks are not in, beyond the custodial and the risk and the volatility, beyond all that stuff, is that they don't know who owns 60 or 70% of the supply of many of these coins. They look at the rich lists and they're thinking to themselves, how could we possibly invest in something when an anonymous source owns this much? And so there was a lot of people that were trying to get their hands on, let's say, Bitcoin, and they needed a really good narrative to drive the price down or up. Futures really serve that. And I think you can back that up however you want, but I do know that there's a lot of people that wanted to get their hands on Bitcoin, and you can just do the math on the futures. It just doesn't add up compared to how much money exchanged hands in the actual market.
Mm-hmm. Now, you're one of those guys that does this mysterious thing we call TA, technical analysis, and you look at the charts, and from there you kind of come to conclusions about good times to buy or sell. Teach us a little bit about TA and how you go about it, what you look at, and kind of like a TA 101 for people.
Sure. I think that technical analysis, I definitely consider myself a student of it, and I'm always trying to get better. And one thing that I have learned over the last year and a half or so of looking at charts and studying charts and learning about it is that it's very easy to make things very complicated, and it's very hard to make things very simple. And in technical analysis, I think that that's no different. Meaning, many times we'll see charts that have, descending triangles. They've got the clouds. They've got the supporters. They got the Fibonacci. They've got all these different indicators plastered all over the chart. When in reality, it may just be one line that you need to know, or one line that you need to look at. And so one thing I try to do is focus on one or two really core principles. I look at retracements a lot, and I look at previous support levels or previous resistance levels as they relate to current price levels in order to see where things may change. And I find that's, anytime I have traded the charts, just purely the charts, no fundamental or macro analysis, that's worked out really well. And if it doesn't fit into that box, then, I go and look at a different chart, and I find a chart that I can apply those simple rules to that is very obvious to me, and then it makes a lot of sense. Because I think the more you put onto a chart, just the more variables, like the more factors involved, the harder it is to really come to a really good conclusion. And that's just been my experience so far.
Right on. Well, let me ask you this then about, how did you, begin to learn the process of technical analysis? Is this something from your background, or did you learn this all since you started into the crypto space? And I noticed your last episode, episode 149 of your show, you were talking about psychological mistakes that traders make. So maybe if you want to touch base on some of that.
Yeah, totally. It has been something I just picked up about for the last year or so. I think that one is, you just go. I'm the kind of person where I don't really do well by reading a book and trying to learn. So I would go on tradingview.com. It's a free site. And you can see all these people that just post their own technical ideas around a particular coin. So let's say you're looking at Bitcoin. There'll be 50 charts that have been drawn up by different traders, and they'll explain how they did it. And so I still do this. I go there and I see what they did. I read through their logic. And then if I don't understand something, I'll go to, I'll Google it, or I'll try to figure it out myself. And then I'll try to recreate it on my own charts and see if I can get something that looks similar. And I've done that over and over. And then also sought out traders at events online and just ask them questions. Hey, how can, what are the things you look at most? What are the things that most people mess up on, and try to get their perspective, especially some of the people who are, in their 50s, 60s, and 70s who have been doing this for a long time, because they tend to have the really good fundamentals. They're not hung up on all the 5-minute charts and the million things going on. They're like, here's a line, follow this line. That's really what matters. And so that's been my process. I think TradingView is an amazing resource, especially for somebody who likes to learn that way. And then when I talked about with the mistakes that often make, and this is something that I found myself making, and I see this happening a fair amount, is technical analysis can often become a self-serving exercise and not a profitable one. Meaning you can get so hung up on getting the technical analysis correct, you forget that the only reason you're doing it, or hopefully the only reason you're doing it, is to make money, or to make a highly probable bet on a direction of a price movement. And sometimes you're like, oh man, I just nailed that level perfect, but you don't actually put the money on the line to capitalize on it. And I think in crypto, as 2018 begins and as it extends, we're going to see an ongoing competition. It's going to get more and more competitive. And one of the tools that people will use to get more competitive will be to hone their technical analysis skills. And I see this already happening, is that they just want to be right more than they want to actually use it to make money. They're not putting all their money in the same way they would in 2017 when they read a report or somebody told them a tip. They would go like, oh yeah, great, I'm going to go, put my money on this or whatever. And I think that maintaining that same level of offense is really important, as long as you have conviction, as long as you have the confidence that comes from, doing your research and also from technical analysis.
Well, let's get down and dirty with it then for a moment, just so that this it's going to be a little dated because most of what we're talking about here is evergreen, but we're actually recording this on the 21st of February, and this episode airs on the 27th. So things could change between now and then. But today we've seen a big drop in Bitcoin and the altcoins. Bitcoin, everything was starting to recover. Market cap was about 520 billion, and then we saw Bitcoin almost get to 12,000. And right now it's sitting at about 10.5. The altcoins are taking a pounding. Most are, down over the last 24 hours, at least 10%, some of them 20%, and market cap's around 453 billion at the moment. Of course, by the time you guys hear this, it could be, it could be worth zero, or we could be back to 600 billion. You don't know. But what is, let's just focus on Bitcoin in particular. What is the technical analysis that you're seeing showing for the near term? And then going, if you do project to the end of the year, where do you see it heading this year?
I think right now it's a pretty healthy profit taking area, right? We went down to around 6,000. Earlier, I guess couple weeks ago. And it's been basically a straight run up, 100% almost increase in price without any real pullbacks, any significant pullbacks. So I think that what we're seeing now is pretty healthy. And I think that it's going to follow relatively straightforward support and resistance levels, which line up pretty well to retracement levels. And if you look at the actual chart itself, that translates into a pullback of, right around 10,300, which is where we are like as we speak. That then the next level will be down to, let's say 9,500, and then down to 8,800 level. And then below that, you're getting below the 50% retracement level. And that's when it starts to get into, kind of unknown. You gotta step back and look at the bigger picture type of territory, because you're out of the healthy pullback phase and into a much bigger pullback phase. So the way I'm looking at this is I always try to set my bids at the lowest possible level without having to stop myself out. Meaning I try to go right around the 50% retracement and then put a relatively tight stop loss on it, but try not to get that stop loss kicked out because the price keeps dropping or bounces down too quickly. Like it often does. So I think that's what we're looking at, maybe down to right around 9,000, 8,800, or at least that's what I'm looking at, because I think if it goes down much below that, we're kind of in a new area where we got to start doing some new analysis. Now, once that happens, assuming it does, it could easily just bounce off of this. Could be a quick hiccup in the road, and we go from there. But once this all happens, once this profit is all taken, I think that we are in for some serious bull run. I think that obviously this all is barring no major extenuating circumstance, some sort of huge regulatory issue or some major catastrophic event. Like we don't really know what would happen if the whole stock market or equities market went way down. We don't know how that would affect crypto yet. We've never had that happen. So barring none of that goes really bad, I think that we could see Bitcoin and Ethereum and Litecoin just take off, like really big takeoff, as all these new institutions come in, as new OTC deals start to come in. Just a lot of money start to flow in very, very quickly now that there's this kind of new established asset class that has some, it's been stress tested enough where you can't afford not to be in it.
So you're talking all-time highs taking off? Is that what you're referring to?
Yeah, I think so. I think that we could definitely see $40,000, $50,000, $60,000 for Bitcoin by the end of the year, or even sooner than that. I think you could see $1,000 Litecoin pretty easily, and $2,000 or $3,000 Ethereum, and that's not even getting into the altcoins. I think that there's a lot more with altcoins. There's just so much money that wants to get into cryptocurrency, but is still so apprehensive about the dozens and dozens of reasons why they think it could potentially fall apart. And those are, in many ways it's valid, but I think the domino is starting to fall where you can't afford not to be in it anymore. And that's the big deal, where once that happens, then the price starts to go up, then it really starts to compound on itself. And this is still all a rounding error for most professional investors. I mean, and that includes banks and private equity, it also includes family offices and individual investors. But once it starts to ramp, it's going to ramp big, because it's just such a small, concentrated asset class so far.
Yeah, it's such an interesting space. I mean, one of the things that I've, when we're looking at all this, there's so many different coins, there's so many different opportunities in the space. Sometimes certain coins will go up without any sort of rhyme or reason, and there's a lot of pumping and dumping that seems to be going on in the space. And I mean, and then we have coins like Tether. I mean, when's Tether going to the moon? It's been $1 forever.
I know, man. I've been margin trading that thing like crazy.
Come on, when's that going to go Lambo Moon? I'm still waiting. I'm actually curious, what are some of I know that, from watching your show and paying attention, I know you've talked, recently you talked about polymath, and recently talked about the Telegram ICO and some other stuff that's going on. But maybe what are some altcoins that you think are interesting, and maybe some blockchain infrastructure platforms that you find are most fascinating in your perspective?
Yeah, and we'd really appreciate it if you'd pick the ones that we're already holding.
Yeah, that would be really helpful.
Yeah, that'd be perfect. I think that I'm really interested in. Let me say this. I am much more concentrated than I was in 2017 in what I think is going to work out really well in 2018. And I think that my thesis now is less about the kind of revolutionary spirit, and now it's more about profitability and solving real business cases. And I think that the coins I'm looking at are ones that solve problems that financial institutions currently have and know that they need to implement. Now, specifically, cross-border payments, I think, is a huge deal. Any sort of settlement layer with that, I think, the whole Swift bank, the way that Swift works is kind of integrated into that with Hyperledger and all that. That's the whole industry. And you look into coins that are doing stuff with this, right? Like you got Stellar Lumens is one of those coins. I think that companies like Chainlink and different sort of oracles are really interesting in that sense. I also think that coins like Omise Go, OMG, is super interesting in that they have such good tech and such a good team, but they're also really under the radar, and they're working in the financial world. That looks really exciting to me. And so a lot of what I'm focusing my time on is talking to the people that have a lot of money, which is banks and people that are institutions, I should say, who know that they need this technology, and more importantly, they would implement it so that they can make an unbelievable amount of money on both sides, right? Because if they can integrate something like, let's say, Stellar into their banks, and they can hold Stellar, assuming there's no securities implications of that, now they control both the supply and the demand side. That solves a huge problem for them from a balance sheet standpoint, but it also solves a big problem on a P&L standpoint, because it can help make them more profitable. I think that is a very, very important trend of going into the financial services and financial sector and incorporating blockchain in a way that makes companies more profitable, as opposed to what 2017 was really all about, is how we're going to build all these new blockchains and we're going to create this whole new world that never existed before. It's like the internet all over again. I'm much more bullish on the idea of upgrading the current system to blockchain. I think that is a very, very profitable endeavor. And then I think the other bucket is just protocols, because when you get beyond protocols, you start to compound your risk. And Jeremy Gardner had a really good talk. I was at a conference in San Francisco, and he talked about how utility tokens are really hard to invest in, because if the protocol fails, then the utility token also fails. And so you're really double layering yourself on what the risk is. And when you talk to a lot of these guys, many of the people who built the original Ethereum blockchains and some of the, many on the Bitcoin blockchain, nobody knows what's going to win. It's not going to be one winner, but people are still like, the jury is still out on what's going to be the preeminent building platform for blockchain, or whether it even is going to be blockchain. We don't even know. And I think that is still a very big question mark. And so I think
it's kind of like the search engines, isn't it? Back, in the early days of the web, we had InfoSeek, Lycos, Dogpile, AltaVista, Excite, Yahoo, AOL, and turned out none of them was the winner. Google came along and stomped them all. So is that, do you see that as possible in the crypto space, that some new technology, will come out and kind of do a VHS to Betamax, beating, and everything changes?
I think that that's absolutely possible. And I think that the big promise of crypto, or I should say of blockchain in general, is there's two ends of the spectrum. One is speed and one is decentralization. And currently, none of the current solutions do this really well. Now we're adding things like Lightning Network and Plasma to Lightning to Bitcoin, Plasma to Ethereum. You've got things like EOS and Hashgraph. Everyone's trying to solve those two problems at once, but nobody's figuring it out yet. And somebody will come along and develop a incredibly fast, unbelievably secure technology, decentralized ledger technology, and distributed ledger technology, I should say. And that could easily become the premier or the preeminent platform protocol for everything. But right now, we're just trying to we're bolting on solutions onto these protocols to make them work. But as it stands, none of them were really built with those two goals in mind, because they're very opposite in that way.
You really do have a chill, calming approach to this. And, my approach to crypto is crypto go up, crypto go down. I'm in this for the long haul, and I'm a blockchain believer. And so, I know how I handle this emotionally, but I see so many people just get bent out of shape when, they get on this emotional, roller coaster as it goes up and it's going to the moon, and then it comes down and they start panicking. Oh, where's it? What's happening? What's wrong? Where's my money going? I just lost half my portfolio. What are some tips that you would give to people to detach emotionally and be able to handle this ride, either as a trader or as a hodler?
Sure. I think that is the biggest. It's the biggest piece of crypto, of anything really, that doesn't get enough attention, in my opinion. And I think that there's a few ways to really answer that. I think the first and most tangible is position sizing. I think that many people are simply putting too much money into cryptocurrency. And I want crypto to be worth, I want it to go to $100 trillion, trust me. And so I want people to be putting their money in. But if you have too much money that you cannot afford to lose riding on very risky, volatile assets, it's going, especially if you're new to investing, it's going to mess with your what I don't care how strong or anything you are, it's going to do that. So I think that's the first thing, is be honest about what percentage you're actually putting in. I think the other big piece is more of a complex issue, which is why, like, what does it mean to you? Like, what does it mean to the person if this thing did go to the moon, right? If they put in, let's say $10,000, which say it's a huge amount of money for somebody, and they dream about it going to 100,000, like what in their regular life is stopping them from having what that 100,000 will give them already? I know that there's things like paying your bills. I understand the day-to-day things that need to be done, but I think that it's almost an escapism for a lot of people, at least in my experience from talking to a lot of people, and that this is like their shot at a new life or a different life or something better or bigger. And I love that. I think that that's it is an opportunity, but I think that a lot of that stuff could be accomplished in life already. It's just harder to do without waking up and seeing something go up 40% and, half your problems are solved. And, I would never ever impart my own judgment on anybody. And I think that everybody can make their own decisions. But I do think that that's a tough conversation to have with yourself. And I think that many people, they haven't had that yet. And crypto really exposes everything.
That's so true. As Eminem said, you only get one shot. Do not miss your chance to moon. So
That's it.
because it's so true. You know what? So I guess, as we're wrapping this up here, we've had an amazing conversation. For one, I'm really, really pleased that you would come on to the show and chat with us. What are some final parting words that you might give to somebody who's just getting into crypto, or they're just trying to learn about technical analysis? I know you mentioned, Trading View. That is a great resource. Is there any other, resources or any other thoughts or final parting words of wisdom for our fine citizens of the Republic of Bad Cryptopia?
Yeah, or a book that you would recommend.
Yeah, I think that the first thing I would recommend for people to do is ease yourself into the crypto market. Let's say you have $1,000 that you have and you want to put into crypto. Invest $100 at a time, and make sure that you put a week between each time you put in that $100. And one, it's a dollar cost averaging is a great way to get started, but it's also a really good way to get used to these ups and downs. Because if you go in with $1,000 on day one, your first experience in crypto, if it's positive or negative, is going to have a huge impact on how you view the rest of your decisions for the rest of your investing career. And you don't want to underestimate that. So I think just ease into it, take time to learn and to just watch it all happen, be a little bit more conservative, and then the opportunities will come. There's
Bitcoin
always
went
going
down.
to be.
Crypto sucks. I hate
I can't tell you, man, people that they just get involved and they go all in, and within 48 hours, something happens and it ruins their psychology for months.
It's a Ponzi scheme.
Yeah, they're like I'm done.
Scam you guys.
This is all BS.
Damn you, Joel and Travis. This is bad.
I think that so I think that's really good. I think a really good book, if anyone's interested in trading, is a book called Market Wizards, which was recommended to me by a few friends, and it's really it's a host of interviews. I think it's 12 interviews where they interview the top 12 traders in the 80s across all different markets. So there's commodities traders, equities traders, everything, currency traders. And you learn a lot about trading styles and what people do and the mindset, and also just how people make decisions. And I think that that's a really good way, because I think if you start with the psychology, the price and the volume, and that all works itself out. But the psychology, that's the kind of thing that if you can start off on the right foot, you're really going to accelerate your progress.
Carter Thomas is his name. Coin Mastery is his game. The website for his YouTube channel, which you guys should go and subscribeify to right now, is youtube.com/coin mastery. Anywhere else in the socials that you like people to connect with you, Carter?
Yeah, you can go on Twitter /Carter Thomas on Twitter. And then, if you just go to coinmastery.com, you can always join the newsletter list. And there's on the sidebar, and I have a free email series, a couple of PDFs, stuff like that for people if they just want to dip their toe in. It's kind of good intro level content.
Dipping your toe in the crypto. Thanks a lot, Carter. We appreciate it.
It's great to be here, guys.
I learned so much from Carter. He's a good guy. And guess what else, Travis? He has now joined the ranks of the Republic of Bad Cryptopia and is in the Bad Crypto Mastermind group.
Oh my gosh, he is? Did we scare him away yet?
No, he's there. And so if you guys want to say hi to him or ask him any questions, I know he's super busy. He makes videos on his channel 5 days a week, I think, maybe even more. But so there's a lot of content on his YouTube channel. Make sure you guys go and subscribe to that at youtube.com/coin mastery.
Especially if you want to learn about trading. Now, we're also going to have another interview in a future episode with another trader. Tone Vase has agreed to come on the show, and
Tone Loke's coming on the show.
Yeah, Tone Loke's coming on the show.
Yep. Is he going to make us some funky cold Medina?
No, funky crypto Medina. That would be funny. That would be a funny song to parody.
That would be funny. Well, speaking of subscribing, if you guys haven't subscribed to the Bad Crypto Podcast yet, what are you waiting for? Click the button that says subscribe so you don't miss a single chewy, delicious episode of the show.
Mom, this guy hasn't subscribed to our podcast yet, and this one over here hasn't left a review.
Seriously, there's no excuse. You guys are citizens of the Republic of Bad Cryptopia, and as good citizens, then you should subscribe to bad podcasts.
That's true. And as always, you should stay bad.
Who's bad?
The Bad Crypto Podcast is a production of Bad Crypto LLC. The content of the show, the videos, and the website is provided for educational, informational, and entertainment purposes only. It's not intended to be and does not constitute financial, investment, or trading advice of any kind. You shouldn't make any decisions as to finances, investing, trading, or anything else based on this information without undertaking independent due diligence and consultation with a professional financial advisor. Please understand that the trading of Bitcoins and alternative cryptocurrencies have potential risks involved. Anyone wishing to invest in any of the currencies or tokens mentioned on this podcast should first seek their own independent professional financial advisor.